Good day, everyone. This is our first online course. It is about Introduction to Institutional Trading and all about order blocks. The first thing I want to talk about is about the difference between institutional trading and retail trading. As you know, there are many retail traders in the market and they are following indicators and oscillators to find out the trade setup and enter to the trade. They are using indicators like moving average or oscillator like stochastic and RSI and different others to predict the next move in the market. While in the institutional trading method, we are following the big money where it goes. The big money is moving by big banks and financial institutions. So, this is the difference between retail traders and institutional traders. The main element in the institutional trading is the order block. An order block can show us where the direction of the market is, where the actual direction of the market is. And what we call it as order flow. So in the institutional trading, we have different main elements. The main important element which we are going to discuss today is called order blocks. And actually this is going to be the normal order blocks. While we are going to have breaker order block, and I'm going to use the term OB for the order blocks. So from the next week onwards, if you hear from me OB, it's the order block. So we have breaker order block and we have source order block. And at the end, we have something called order flow. So these are the main elements for institutional trading method. But of course, there are other topics which we will cover it in the next lessons. Today, our focus is going to be on order blocks, which is the normal order blocks. And we will discuss about breaker order block, source order block, and order flow in the next weekend online course. And following that, in the second weekend, we are going to learn how to trade, how to enter the trade using order blocks. So basically, we are going to discuss about these concepts for the next 3 weeks, including this one. In the order blocks, there are basically two types of price action. We have bullish OB and we versus bearish OB. So let me show some graphs. As you know, the institutional trading is based on Japanese candlestick. And I hope that everyone is completely familiar with the Japanese candlestick. So here, in the bullish price action, which is our first example, we have a bullish candle regardless of time frame. This can be in any time frame. So let me just mention this important point. Order blocks can happen in any time frame, from the highest time frame, monthly, weekly, daily, hour 4, hour 1, 15 minutes, 5 minutes, 1 minute, whatever. So regardless of time frame we are talking now. So consider this in any time frame, this price action. So market is moving up, then it is coming down. After that, it's going up. So as you can see, here we have a bullish price action. Now, in the bullish price action, and when the order flow is up, which we will discuss about order flow, because we cannot call this one order flow up, as we cannot see the whole chart. But for this kind of price action that we can see, if this is the whole, considering this is the whole price action, then we will call this order flow up. So how to identify the order block here? That's the main thing we want to focus on. So let me just change the color to black, for example, here, for the sake of explanation. As you can see, price moved up. After it went up, there is a bearish candlestick came down, and then it went back up. I hope that most of you are familiar with engulfing candle. So most of the concept of order block is based on engulfing. It means this bullish price action, this bullish candlestick is engulfing the bearish one. So how to identify order block in this case? Order block here, which we show it always as rectangle with different colors, which you have the color codes, but here we don't care about color codes. We just want to know how to identify order block. Whichever color is it, just rectangle. So the rectangle, it will start from the top of this, exactly from the top of this bearish candle to the bottom of the bearish candle. So this area, inside this rectangle, we have order block. Basically, it's a previous candle to the bullish one. So it means market push down, then all the banks and big financial institutions came. They pushed the market up. So the order block has been created now. And now this order block will be valid only till it's going to be broken. So until that time, this order block is valid. So let's continue with the price action. And let's see what is going to happen. For example, we see another bullish, another bullish, another bullish, and then we can see the price is coming back down to reach to this order block. So when it touch this order block again, it means this is an opportunity to buy because there are many orders from the big banks moving the market are placed here. So this is going to be the best opportunity to buy back the market. But if we see the price action coming down and closing below this order block, in that case, this order block, it became invalidated. So it's not going to be valid anymore. And of course, the market order flow in this case is going to change to the down move. But it can be something else. For example, it can just go down, but closing inside, but it can give the wicks outside. So if it is giving the wicks outside, no problem, it's still valid, because this is what big movers are doing to take out the stop loss for the retail traders and for other traders, because they have big money. So they have big money and they can stay in the market. They don't place a stop loss this much short. So automatically they will stay in the market. So the purpose of giving this week is to take out the stop losses, and it's back up and it's closing inside the order block. So this order block is still valid, and after that we may see something like this, crazy push up. In this case, when we have such price action, we will modify or we will update the order block. Still, this is order block, but we will have another order block here. Let me repeat. As I said, the order block is like that. So when we have a bearish price action, bearish candlestick down, and we can see another bullish candlestick engulfing, covering the previous candlestick, then the previous candlestick from the lowest to the highest, it's gonna be the order block. And there will be a rectangle to the right side. So we can predict and we can expect the market to come down to this area. And when it's back, again, there will be another opportunity to buy back the market. So hopefully so far it is clear. So I'm going to discuss about bearish order block now. So this was bullish order block, and bearish order block is going to be simple, same as this one, but of course in the opposite side. So I will give a quick example just for you to understand it better. So here we have a bullish price action, and then suddenly here market is reversing. Market is reversing back down. So I'm sure you can by eyes now you can understand where is the order block. So we have this part. This is a bullish candle, and the next bearish candle is covering the previous bullish candle, engulfing it, so we can call this one order block. The previous candle is going to be the order block. So the market is going down. So here we may have some bullish setup, sell setup, 3 bullish candle to retest the bearish OB, retest this bearish OB, and then after that, after touching that and retesting that, we can have this price action to come down. Yeah. And then here, I will show you another thing here. So let's go through this price action. We may have this price action here. Okay. And then, of course, when it comes up, we are looking for another bearish setup. So once we get this one, here we can identify a new order block, because this bullish, this bearish candle is engulfing the previous bullish. So this is order block. So when we see this, again, we can have some bullish price inside this, even up to 50%, or even the whole, even up to the top. But of course, if this is going to close here above this bullish order block, then in this case, this order block is going to be invalidated. But this order block will still be valid. So we can expect the price to go up, retest this area, and then once retested, but hold on, let me just clear this order block because it's not valid anymore. That's why I deleted that. So because it's not valid, so I will delete that. And then this is going to be, now we have a new order block here. It's engulfing the previous one. So this is going to be a new order block, bearish OB. So, of course, it's not gonna be always like that to identify order blocks easily like that. Sometimes it's going to be more complicated. But of course, when we go through the charts, after this, I'm going to show you some real examples, a screenshot, and we will see some more complicated order blocks. And tomorrow, especially tomorrow, we are going to have different things, and we will go through the charts and we will review it together, and then we will see how is it going to be. So right now I want to talk about one more thing. I'm going to talk about the strength. Let me use a different color here. Strength of order blocks. Actually, there are two factors. One is the time frame, and the other one is the number of candles. Okay, let me quickly explain you these two cases. So for the time frame, higher time frame is going to be a stronger order block. So basically, higher time frame equal to a stronger OB. Okay. And number of candles, of course, less candles equal to a stronger OB. Now I'll show you this as example, don't worry. So of course, first one, I don't think it needs any example. It means when we have a bullish order block in the daily or weekly, of course, we can rely on it more than when we see it in the 1 hour or 15 minutes or 5 minutes. So that's why if you want to be more confident when you are trading, it's better to focus on higher time frame to identify the order flow, which we will discuss it next week, and also the order blocks within the order flow. So higher time frame is going to be a stronger order block. Regarding the second factor, which is number of candles, I have to show you one example for better understanding. But right now we have one example, so I can use this as one example, and then and I will create the second example for you after this. So far, whatever order block we identified is using only one candle, right? So this candle is bullish, and then next one is engulfing this. So this one, we consider it as very strong order blocks. This one too, because there is only one candle. So less number of candles, a stronger order block. Because in one shot, it's engulfing and it's covering the whole body, and even of course here we don't have any weeks, but if there was a week, we are considering week as well. So let me just create a quick example for you. So consider here we have bullish order block. Then we have another bullish order block. Another one here. Then we have something down. Then we have something up. Then we have another bearish. And consider this one with the weak. I mean the bullish one, sorry, hold on, let me. Yeah, this one. This bullish one, I want the wicks. Okay. So, sorry for my drawing. Okay, just consider that, sorry. Then we have a bullish candlestick. Okay. So in this example, how to identify the order blocks? Order blocks, of course, it's going to be this area, this candle, this bearish one, because this is engulfing the bearish. But here, you should consider the previous one weak as well. So we are putting this bearish and the previous one. Why? Because the previous one has a weak down. So we will put that inside the order block. So this case is different than the previous one in the top. The difference is that here we have two candles before the bullish price action. So comparing these two, if we call this example 1 and if we call this one example 2, which one is a stronger order block? Of course, the first one, because the first one has less candles consisting the order block. Okay, hope it is clear. Of course, if I go through more examples, you will master this, I'm sure about that. So I just want to stop sharing for some time. And I'm going to show you some examples here. Okay. Let's look at this one. This is the R4 order block, R4 chart analysis, okay? So here, as you can see, this area, we have order block. This is a H4 order block, that's why we are showing it in red. And as you can see here, you can see this bullish order block. There is a indecisive bearish candle, and previous to that, there is one bullish candle, and we will cover that one inside because it's the same. They are actually same. So then it's going up, but no need actually, because this week is less. So we have only one candle, then bullish, and then we can see after that it's coming back, retesting the order block, and then going up again, coming back and retesting that. Another example. Yeah. The next example is a daily order block, daily chart for dollar Swiss. And you can see here, this is a very strong order block. Why? Because it's happening in the daily, and also it's consisting only one candle. So one bullish up, then engulfing that down. So this is the daily order block, which we show it in light blue color. So this is the very strong order block because of two reasons. It is in the daily chart and it is consisting only one candle. So after this bullish, we are getting bearish engulfing down. Next example. Next example is the dollar Swiss, again H4. As you can see here, we have an indecisive candle bullish, I mean green. As long as it is green, that's enough. So it's green. And then after that, we have a bearish engulfing that, covering that candle, the previous candle. So it's coming down and it's creating the H4 or the block. Hope this is also clear. I just want to show more examples. So let me just quickly finish these examples. We have another one here. You can see I have a daily chart, US 30. As you can see, here we have daily order block. So again, and this is happening inside weekly order block. So this is really strong. This one is very strong because it's happening inside weekly order block. It's happening in the daily time frame, and it's happening only by one push. Actually, let me tell you, this is two candles, but this next candle, which you can see, this small one, this is for Sunday night candle. But anyhow, this is only two candles, but it's happening in the daily time frame, and more importantly, it is inside the weekly. So when we are getting daily push like that, and this is the order block, inside the weekly order block, this is showing the direction is up, and as you can see, it goes all through. And it's breaking this high and breaking this high, because it was very strong, because it was initiated from the weekly order block. Next one. Yeah, this is a pound CAD. And here in this daily chart, again, this is a daily chart. You can see here, there was a push up to the weekly, and then it went down and it closed below that bullish. So that's why it's daily order block. Next example. Pound CAD. This is the time frame R4. So here, as you can see, we have up weekly. This dark blue is the weekly, then daily is going down, and then here this one, hold on, this one has a problem. Yeah, this one has a problem. Just ignore it. Ignore it. It was not correct. Okay. This is gold, which we discussed. And I have Let me see. Yeah, this one is also good as a last example. This is the coffee daily chart. Coffee daily chart, you can see there is a bullish up, and then bearish one is engulfing, closing down. This is strong enough. It's happening in the daily chart, daily time frame. Then it's moving back up, retesting the daily order block, and you can see it's giving weak. This is the example I was discussing in the theory. So it's giving weak, but it's coming back and closing inside the daily. So what does that mean? It means this daily order block is going to be valid, is not invalidated. Because if it was closing above, then it was getting invalidated. Then again, it is pushing down. So this is the daily order block. And here we have coffee. This one is R4. So in this chart, you can see that we have R4 order block. Here, there is one. There is one here. It's by one candle pushing down, going back up. Again, it's coming back down, going back up. Here, there is one. This is actually, okay, this is a very good example. And we came to the right one. Because you can see this H4 order block consists of 1, 2, 3, 4. So this is, see how many candles are there to create this push back down. So this means I don't consider this order block as strong. This one is not as strong because it took me 1, 2, 3, 4 candles to make this down move. Okay, so if it was only one candle, this was stronger actually. Okay guys, thank you very much for listening to me and hope you learned something new. So I'm going to disconnect the session. Please come back and join again so we can have your questions and hopefully we will make everything clear. So I'm waiting for you. Please join back immediately. Thank you.